Ajay Piramal from Piramal Enterprises joins in to talk about their numbers. Mr. Piramal, your second quarter consolidated profit has largely been led by financial services, while pharma business profit has been lower on a year-on-year basis. What's led to this kind of divergent performance?
So the key drivers, our growth rate in profits have been 24%, and for the 6 months it has been 26%. Our profits on a normalized basis on 6 months is 863 crores. The main driver is the financial services business, where the loan book has grown by 59%.
What led to strong financial services performance? Which segments led to the growth? And give us a sense on how margins and NPA shaped up.
So our growth has actually been, whereas we began a few years ago only with real estate, now it's been a diversified growth. Last year we started the housing finance business and lending to housing finance, and now that is about 2,000 crores is our book on housing finance. In addition, we also have got loans towards small and medium scale businesses, which have also grown well. Our corporate loan book, other than real estate, has grown 3 times of what it was a year ago. So there has been growth overall. In the current environment, there has been a lot of talk about NBFCs, liquidity, and the real estate sector. As I can see it, the question is not of liquidity. In the system, there is adequate liquidity. There have been several measures which have been taken in the last few weeks by both the government and the RBI to ensure that there is liquidity in the system. But what is important is that there is a lack of confidence in terms of the banks and the mutual funds to lend to NBFCs. And I think this is what, hopefully over the next few weeks, this confidence will be restored, and banks and mutual funds will start lending to NBFCs. Even in this difficult time that we have gone through in the last few weeks, I'm happy to say that as far as we are concerned at Piramal, we found that the banks have been been lending us enough. In fact, many new banks which were not there earlier have now come to lend us. The existing ones have also increased their exposure to us. And our CPs which were due, more than 70% of them have actually been rolled over again. So overall, I think the situation should be better as we go ahead.
Right. There are also concerns, Mr. Piramal, on ALM position. How is it that you're placed in terms of your ALM, and will we see stress if RBI does change the norms? Will you grow slower in lending to real estate, and would you be hiking rates towards lending to real estate players?
So as far as the ALM is concerned, we have got a good match of the assets and liabilities. In fact, the RBI allows for a 15% gap between the asset and liability funding. I think we are not in that. We do not have a short-term gap at all in that space. And over time, we are increasing our dependence on long-term funds, because going forward, I see that the environment, it is better to be much more in long-term funding. So what we are doing is that we are going to raise ECBs, and we are also looking at raising long-term bonds. As far as the demand is concerned from our developers, actually demand as well as other corporates, our demand is good, but we'd like to be more conservative to ensure that if there is any further deterioration in the system, which I hope does not happen, we should not be caught on the wrong foot. So it's better to be conservative in today's environment. I think as far as rate is concerned, I don't see that being an issue, because many of the marginal players in the NBFCs who were actually lending till now without taking into account risk will be fallen on the side, and we will have an opportunity to have now more rational rates as far as lending is concerned.
Thanks for that, Mr. Piramal. Thanks very much for joining us and giving us those details.